Hi everyone, welcome again to the Law and Hi. You are my legal circles and I'm so glad to be here with you today. In this unscripted video, I'm going to be answering questions about tax. And after this video, if you have any more questions, please don't hesitate to drop in the comment section and I'm going to go right into it to answer you at the long run. Tax should be paid by anyone that is working. Taxable is called taxable income. So if you're working, if you are earning, so tax follows what you earn. So as far you're working as an individual, you pay payee that we call pay as you earn, as an employee. If you are a sole proprietor or business owner, you also pay tax on what you do. If you are a company, you also pay tax. There are different taxes, whether even as an NGO, you also pay tax, I can tell you. But there are different tax that is accrued to everyone at a particular point in time. So as a business owner, that you are running a business, you are not registered, you're expected to pay personal income tax, not a payee now. You are expected to pay personal income tax as a business owner. So, and according to the new tax law, if you earn less than 800,000, you are exempted. But when we talk about exemption does not mean that you are not supposed to file your tax returns. Is that during your tax returns that they will know, and it will be like a full disclosure that this is the amount that you made and you are exempted from paying any tax after the assessment. So, but as a company, then you pay company income tax. If you are more than a small company, which under the new law, a small company has been explained to be business owners as companies that make less than 100 million in their gross revenue annually. So if you made more than 100 million in your gross revenue annually, then you are a big company. Then you are to pay company income tax, you are to pay development levy tax and other tax as it comes, different tax, and then you are to pay them. But if you're a small company, you are exempted from company income tax and you're also exempted from the development tax. Yes. Time in this new tax, you will be doing what we call self-assessments. You are expected to make sure that your records are clean. Then you file your tax returns, and when you do self-assessment, you go there, then there are different percentage that is accrued to you on how your tax will be deducted based on what you disclosed in your um in your in the filing of your tax returns. Yes. Yes, invoice do help in even in keeping your own financial records, yes, and also in tax, because invoice clearly states the narration of the money that have been paid to you. If it clearly states the maybe expenses incurred that has nothing to do with the main service charge. Maybe for example, for us that we are lawyers, you see expenses like filing, logistics, transportation. Before your professional fee, we have appearance fee, we have service fee. All these invoice will clearly explain what the money is meant for. And for us as lawyers, that we are expected, as service provider, that we are expected to also charge your VAT. Your invoice will clearly describe what your VAT is and what what you base your VAT on in your invoice. And so anyone during your financial during when you are filing your returns and you have your invoice, it is very easy for anyone that sees your invoice, vis-a-vis your statement of account, vis-a-vis the filing that you have done. There is so much clarity. And what this does is that you are showing a proper disclosure. They know what is what, and they know the ones that is taxable. But invoice helps you in to make it much easier, even when you are not there to explain to anybody. Okay, so VAT is value added tax, and value added tax is should be charged on goods and services. However, under the new tax law, there are some goods that have been exempted from charging value added tax. For example, consumables, we have basic food items, medicals, educational services, exported goods, and certain non-profit goods. So basic food items, medicals, educational services, exported goods, and certain non-goods, they have been exempted from value added tax. That means that they are not paying VAT, and they are not the government is not expecting them to also charge it on the final consumers, because the business owners are not the one that are actually paying value added tax. It's the consumers that are paying, and the government has exempted all these listed people from payment of VAT. That means that they are not expecting them to collect it from the final consumers. And value added tax is not what you add to your profit. It is not your own. If you are a service provider, then you could charge 7.5%. Then you are expected to remit it to the government. If you are selling goods, you are expected, you are not under these exemptions that I have listed, then you charge VAT, then you are expected to remit this 7.5% to the government. Peradventure, if you fail to remit it, then it is a criminal offense, on your part, and you can be sued for it. When it comes to value added tax is not addition to your profit. It is to be remitted to the government. Does narration affect tax? All right, so I'm going to link it to the invoice explanation that I gave earlier, because what narration just does is to just put a clarity to what the money is meant for, instead of you explaining and explaining and explaining. For example, for us again, that we are professionals, and you are prone to, maybe you are managing a property, and a tenant has paid rent to your account. The proper narration of rent will clearly indicate at the point of when you are filing your tax returns that that particular money, it was not yours, it was rent paid to your account for your client. So narration will help at the long run. It makes the work and the filing of tax returns, it makes it much better. Yeah. You are paying tax on the amount of money paid on for the service. Yes, you pay tax on the amount of money paid for the service. So that is why they call it gross. Gross, on your gross. Payment is made on the gross, not on the net. For if you're a business owner, and even you are a service provider, they will treat you, and you are not a company. For example, you're a service provider, they will still treat the money that you earn in your business like normal money, like a salary money of less than 800k, so it's still not taxable. Okay, so based on the new tax law, if you are a a business owner, and you are running a business name, your business will be treated like an individual making money. That means that you'll be treated like an employee or something. So for example, if you are running a business name, because it's like a sole proprietorship, then you charge a VAT. Your VAT will be on the service charge, which is 7.5%. And that so-called VAT will be remitted to the government. And the service charge which is your own money, after every overhead deductibles and all, you will pay personal income tax on that particular amount of money. The benefit of you upgrading to company or being a company limited liability is that you'll be treated as a small business owner, and as a small business owner, that means that you are not making up to 100 million gross in a year. Then you will enjoy the exemption of not paying company income tax under this new tax law. And that is why when that boost of upgrade, people upgrading for business name to company limited liability, that is the reason, so that they can enjoy the exemption under the new tax law that small businesses enjoy if you are making less than 100 million in a year. So when it comes to VAT, value added tax is a consumable tax, and it is not the business owner that pays the tax. It is the consumers, the final consumers, that pay the tax. And don't forget that it's not all businesses that should be charging VAT. VAT is 7.5% of the service, but it's not all businesses that should charge VAT. You can only charge VAT if you are into goods and services, not goods, not products. It's two different things. Goods and services. And even under the goods, there are exemptions already, which I have also explained initially, which includes food, educational materials, which includes medical materials, and also exported goods and non-profit goods. All these goods are the goods that have been exempted under value added tax, from paying value added tax. And so if you buy educational materials, even if it's in the supermarket, you are not expected to pay any VAT on it. If you buy any consumables, food, wherever, you are not expected to pay any VAT on it. Even when it comes to hospital supplies, medical supply, drugs, you are not expected to pay any VAT on it. These are one of the benefits of this new tax law, because it's cushioning the average Nigerians from paying extra money in all these things that are common needs to the general public. Business owners, VAT is not paid by you. It is paid by your customers to the government through you. So when you collect the money, it is not an addition to your profit. You need to remit it to the government. Thank you. So my legal circles, I hope I have answered most of the questions on your mind. If you have any further questions, don't hesitate to drop it in our chat box, and I'm going to get right into it. Thank you again for joining us. Share this video with your friends, families, frenemies. Let them know that this is a knowledge that you need to have in year 2026, so that you won't fall victim of all this things that is going on, especially tax. Thank you.